Welcome, everyone, and thank you for joining today. My name is Trey Goodson. I'm Director of Marketing Communications for NC East Alliance. We have a great presentation today from a couple of ECU professors on blockchain technology. We've all heard about blockchain, but what really is it? How does it work? And what are some of the applications for the various industries out there? As always, we'll get to the presentations in a minute, but first I'd like to thank some sponsors, our platinum sponsors, East Carolina University, who helped put this webinar, helped us put this webinar today together. Integrated Financial Holdings, Kilpatrick Townsend, Envidant Health. Our gold sponsors are Bull & Company MediaWorks, Dominion Energy. Our silver sponsors are Eatonton Chowan Partnership, Evolve, Martin County Economic Development, Martin Marietta, Nutrien, PNC Bank, and the Port of Virginia. And as always, I'll quickly run through the logistics for today. We will have a Q&A session after the presentations today. So if you have any questions, please try and hold them until the end. When you do have a question, you can click that Q&A box in the bottom left, type in your question and submit it. If you'd like to ask a question live, you can do so by clicking that raise hand icon in the bottom right. I'll unmute you and you can ask a question live. The chat box will also be available. We may submit some resources or links in the chat box from the speaker, so people look out for those. You can also submit your questions in the chat box as well. If at any point today you need to adjust your audio settings, you can do so by clicking that audio setting tab in the bottom left and adjust your settings as needed. You can change your viewing options by clicking that viewing options tab in the upper middle and changing your settings as needed. You can also click those 4 arrows in the top right to enter and exit full screen mode if you need to. So that, I believe, does cover everything. And now I'll introduce our moderator today, Keith Wheeler. He's Executive Director of the Office of National Security and Industry Initiatives at ECU. Keith, turn it over to you.
Thanks, Trey. Good morning, everybody. Exciting topic to cover today. Like Trey said, 2 great faculty here at ECU to give us a bit of a different view of blockchain. And we don't hear all that much about blockchain. It's mostly all cryptocurrency all the time. It seems like in the news cycle these days, especially with Bitcoin and some of the other kind of really weird peaks and valleys that are showing up in that world. We're going to take a different slant today and talk about some of the other uses of blockchain. It sounds kind of weird to talk about the other uses, but it's just, you know, crypto has been set kind of front and center with so many things. And so our first panelist today is Dr. Armin Krishnan. He's an associate professor here at ECU and the director of security studies. He received his master's in political science from Ludwig Maximilians University in Munich, and his another master's in intelligence and international relations, and a PhD in security studies from Salford University, which is in the UK. He previously taught in the Intelligence and National Security Studies program at the University of Texas, El Paso, UTEP, and he's authored 5 books, many journal articles on novel aspects of contemporary warfare and international security, some of which include military outsourcing, autonomous weapons systems, targeted killings, neuro warfare, and paramilitary operations. And here at ECU, we have the luxury of him teaching our courses on intelligence, foreign policy, weapons of mass destruction, and national security. So without further ado, I'm going to turn it over to Armin and let him take over the first session.
Thank you very much, Keith, for the introduction. Good morning, ladies and gentlemen. I will give you a brief overview of blockchain technology applications. So I've prepared a presentation that covers some of the key aspects. So first of all, I want to start with some background on blockchain technology. I want to distinguish between cryptocurrencies and crypto assets. I will talk a bit about smart contracts platforms, financial applications, business applications, other applications, government applications, and finally, I want to make a few comments about central bank digital currencies. So here's some background on Bitcoin and how it was developed. So there is person that is credited of having invented Bitcoin, that is Satoshi Nakamoto, and he put out a white paper in 2008. And that background here was the financial crisis, and it was an effort to address the issues that caused the financial crisis. Bitcoin was started to be traded on Mt. Gox in Japan in July 2010. Initially, it was used for darknet transactions, and from 2010, we have lots of Bitcoin clones. In 2014, Mt. Gox collapsed, and that was a big setback for Bitcoin. And then the major breakthrough came with the launch of Ethereum in July 2015, that is called Blockchain 2.0. And yeah, it's in the media since 2017 because it reached $20,000 per unit. And since 2018, we have so-called Blockchain 3.0 projects. So these are much more advanced. And one example is Cardano. And since 2020, we have several governments that started blockchain-based projects for digital currencies. So it's getting the interest of the financial industry and of governments. So we have CoinMarketCap. There are almost 20,000 coins or projects that are active. Some of them are not active anymore. The valuation is over $1 trillion, so that is quite sizable. And yeah, the price of one Bitcoin is now $30,000. It peaked around 64. So it has come down, but it's still pretty pricey, and it's still profitable to mine Bitcoin. And yeah, some institutions have started to acquire cryptocurrency and other crypto assets as part of their investment strategy. And there are also many broader applications of that technology. It's not just for financial speculation. So that is CoinMarketCap. Many of you will be familiar with that. So what it is, it's a peer-to-peer version of electronic cash. So that was an earlier project launched in the 1990s. It uses distributed ledger technology that records and confirms transactions using a consensus protocol. It uses public key encryption, 256 bits, and that is used for signing transactions. And that provides the security using the cryptographic hash. And it works with proof of work. So that's the algorithm that is used for consensus. And the advantage of proof of work, it creates an immutable record of transactions, so it cannot be changed. And it's also highly distributed. So we have over 100 countries where Bitcoin mining takes place and where Bitcoin nodes are run. So it's impossible for any country or government to shut it down. So you have essentially a public key and a private key. So the public key is your Bitcoin address, and then you have a private key with which you can control the transactions related to your record on the blockchain. And you're using a hash for signing every transaction that is based on your private key, and that provides the security for that. And yeah, you can look up every transaction on the Bitcoin blockchain. So it looks like that. So you have a fee for every transaction. You have a hash, that's the signature for the transaction. And you can see which address it originated from and where it goes. So it's everything is trackable, and you have a complete record of all transactions that have ever been taken place on the Bitcoin blockchain. So that's just a schematic overview. I mean, very simplified how it works. So you have miners, you have different nodes, you have a transaction that is initiated by a user from a wallet, and these transactions are bundled into blocks. And every block has to be confirmed using a consensus of all, I mean, it's processed by the miners and then needs a consensus from the network. And then you have the updated block and so on. So you're using specialized equipment for that. So you have ASIC miners. So these are specialized computers. And you have mining farms. So it's very computationally intensive. So it requires a lot of energy to run it, which is one of the criticisms of Bitcoin in particular. What are the advantages? It's trustless, so no third party is involved because it's peer-to-peer. It's secure because of strong cryptography. It's instant, so it is faster than the traditional financial transactions. It's permissionless, so any legitimate transaction will be processed. It's immutable, so transactions cannot be reversed and remain indefinitely on the blockchain. And it's unconfiscatable, which means that the government cannot simply take the money out of your bank account or out of your crypto wallet unless they have the private key. So you have cryptocurrencies that are like a replacement of fiat currencies. You have utility tokens. So the vast majority of so-called crypto assets are actually utility tokens. One example is Ethereum. Then you have security tokens, so you can tokenize anything. It's like producing shares of something. Then you have DeFi tokens, so that's decentralized finance. Then you have non-fungible tokens, so that's the newest addition. So these are unique digital tokens that can be traded, and usually it's related to artwork. So a few words about smart contracts, because it's very important. So a smart contracts platform is a software that can execute contracts that that the user can enter with each other. So essentially it's programmable money. So funds can be released under objective conditions when they are met. And the basic model is a slot machine, and that's relevant for the Internet of Things. And yeah, Ethereum is a smart contracts platform, and it has been mainly used for issuing tokens. So you can tokenize anything. You can tokenize your house, for example. So you can sell those tokens, and it runs on the Ethereum network. So you are entering in a contract with other parties using tokens. And yeah, smart contracts are essential to decentralized finance applications. So that is just an example how it works. So the example here is a vending machine. So once objective conditions are met, once you insert the money, and then it releases the kind of thing you want from the machine. So it's very simple. So here are some financial applications. So the main one here is stablecoins, and they're very controversial. Just last week, a major stablecoin collapsed, and that caused a lot of turmoil in the market. You can use decentralized lending, so you can use crypto as a collateral for taking out fiat loans. There are decentralized exchanges where you can exchange on the blockchain using smart contracts. You have wrapped Bitcoins, so you can transact in Bitcoin without actually transacting the Bitcoin itself. So it's another smart contract. You can have prediction markets, so that is very important for finance. So it allows you to bet on certain outcomes, and you can do yield farming. So you can earn tokens by holding tokens and so on. So there are business applications. So secure data storage and management is a major one. So individual records can be separately encrypted, and that adds another layer of security. A shared use of computing resources. So you can create a supercomputer. You can provide computing resources to the network and get compensated in tokens. You can use it for Internet of Things applications. So you can allow machines to transact with other machines. So you can have a smart car buying fuel using cryptocurrency. You can do fundraising. So it's very easy to transfer cryptocurrency across the world, and it's very cheap. Insurance, you can use smart contracts. So policies are paid out when objective conditions are met. You can use it in healthcare to store medical records and manage access to healthcare. Real estate, so you can record property ownership on the blockchain, and you can transact in that as well, transfer a property using the blockchain. And then there is supply chain management, and we hear a presentation about that as well. There are social media applications. So the main advantage is it's censorship resistant. You can host websites on the blockchain. You can publish on the blockchain. You have digital artwork that you can trade. And there's other protection of intellectual property. such as patents, designs, and brands. So you can have an IP registry on the blockchain, and you can use it for anti-counterfeiting. There are secure data storage and management, land management, digital identity will be big. So that will become important. So you can store your biometrics on the blockchain, blockchain voting to make elections more secure. And finally, central bank digital currencies, which is my final point for today. So that is a trend that has begun some years ago. There have been a few countries that have experimented with digital currencies. One of the first ones was Venezuela, that issued the petro in 2018. And yeah, now we have a broader interest of central banks to develop digital currencies. So the Federal Reserve Bank of Boston just released a few months ago, Project Hamilton. So the US government is working on a digital currency that can replace the current dollar. And that would be a private blockchain as opposed to an open blockchain. So there would be only trusted validators that can validate transactions. It would be a permission system. So that means that you can exclude people. You can prevent transactions from happening. And it would be also a two-tier system that involves banks. So you would get a wallet from the bank, and the bank would get the cryptocurrency from the central banks. So what are the advantages of doing that? Universal basic income, so you can use it for transfer payments. So if you want to hand out cash to certain groups of people, it can be done very quickly and very easily. You just send the money into the qualified wallets. You can use it for taxation and fines. So potentially the government can take money out of your wallet if you're owing taxes or fines. And you can impose capital controls. So you can impose restrictions on how the money is spent, and you can do quantitative tightening. So you can burn currency, so you can impose negative interest rates. So you would have much greater control over the economy. And that is something that central banks would like to have. So I'm coming to my conclusion. So Bitcoin was just the first implementation of blockchain technology. Its main strength is solving the double spend problem, greater security, eliminating third-party risk, being permissionless, and establishing an immutable record of transactions. Since then, there have been many other blockchains that have been released, and they solve a great variety of problems. So there are many different applications of blockchain. Although blockchain technology has been criticized for being inefficient as it requires so much computing power and energy, in some ways it's more efficient than centralized systems that are currently in place. For one reason, it's much more secure. There are many business and government applications of blockchain technology, some of which I've introduced to you. And it's highly likely that major governments will roll out blockchain-based digital currencies in the next couple of years. So according to an estimate of the International Bank for International Settlements, more than 20% of the world population will be using digital currencies by 2024. So that's pretty soon. So this means blockchain is here to stay, and it's going to transform many industries and our lives. So thank you very much for your attention.
Wow. Thanks, Armin. That's even better than I was anticipating. I'll tell you, that's an amazing overview. I don't think I realized probably half of the applications that you just covered. So thank you for doing that. I'm sure we're going to have some good questions from our guests based on all those different areas that you covered, and there may be even more. Who knows?
There are definitely more.
Yeah. So we're going to change gears a little bit. So Armin has given us a really good broad spectrum of application, kind of hitting the wave tops of all the different applications for the technology. And our next guest is going to dive down into, kind of one of them or a bundle kind of area to look a little deeper beneath the surface. And so our next guest is Dr. Jon Kirchoff. He's an associate professor of supply chain management and also a research associate in our Bureau of Business Research in the ECU College of Business. His primary areas of research are sustainable supply chain management, healthcare, supply chain management, and functional integration. He's published several articles in journals like the Journal of Operations Management, Journal of Supply Chain Management, International Journal of Physical Distribution and Logistics Management, and several other academic and professional publications. And prior to academia, he was in the workforce for 15 years in global purchasing and logistics management at Fortune 500 companies, including Mercedes-Benz, US and international. So without further ado, Dr. Jon Kirchoff, thank you.
Hey, Keith, thank you very much. And thanks everybody for being here. I really, this is great and this is very interesting. And Armin, what a great overview that you gave. I agree with Keith. There was so many things that you were talking about that were pretty amazing and pretty interesting. And as Keith said, and as Armin had hinted at in his presentation, the applications for blockchain certainly go way beyond just the cryptocurrency, and Armin listed many in some of those slides. And I think that the real key is that blockchain, while it's known for the cryptocurrency and those various applications, it's also being used by businesses to help them with efficiencies and with some of the issues that they're facing. And I would say, particularly today, post-COVID or trying to get post-COVID, these are really critical times in supply chain management, which of course is what I'm going to talk about with all of you. So I am going to bring up the slides here, and hopefully everybody can see that. And if you can't, I assume somebody is going to tell me pretty quickly that they can. So what we'll do is we'll talk about applications, specific applications.
John, I don't see your presentation yet.
You don't see it? All right, hang on just a second here. I think I know what happened. Hold on. I know exactly what happened. Sorry about that. All right, there. How's that?
All good.
Thank you. Apologies. Little user error there. So we'll discuss some specific applications within supply chain management. So I'll just do a real brief overview. And you all heard of supply chain. If you hadn't heard of supply chain before, you've heard of it now. You're probably sick of hearing about it now. And I just pulled a couple things. This was one of the online articles that said 2021 moves supply chain from jargon to meme. And you can see here, whoever this person is says, me arriving late to things, sorry, supply chain problems. Okay, so everything that we're dealing with today seems to have a supply chain problem component to it. In fact, I was trying to get my daughter's cell phone to work, and we're having a hard time getting a SIM card. And my wife says, well, it must be supply chain. And so we're sick of it. But companies are trying to figure out ways. They've been using blockchain to improve before COVID hit, and now that we are trying to get through COVID, I think that companies are even more interested in finding applications and ways to stop disruptions in the supply chains. So you might say, well, wait a minute, the supply chain stuff, these disruptions, we're supposed to be getting through it. And unfortunately, what the statistics show is that some of that is coming back. And you can see in this chart, this is getting into the end of 2021 and into 22. And many of you are probably seeing this within your own lives of getting product or at your companies. I work with a number of companies on projects, and we're all having continued supply chain disruptions, whether it's from a freight standpoint, freight being held in ports, freight not being able to get to ports, the drayage from the port onto transportation to get to us. And other things like the chip shortage continues. We of course are having companies that are trying to increase their capacity here in North Carolina. They'll be building a chip manufacturers are interested and committed, but this all takes time to increase that capacity. And in the meantime, companies still have some of these problems. Well, if we could talk about all of the challenges of supply chain management on and on. I mean, we could do a whole webinar just on that, but let's try to boil it down to some of the things that companies are really having problems with today. All right. One is the transparency. What are the processes that the supply chain is going through and how to track that? Visibility. Where are the bottlenecks within the supply chain? Traceability. Where's my shipment? All right. Where are things moving? And finally, trust, which is critical. Is the information that we are receiving correct? And really the three, transparency, the visibility, and the traceability, they all build up to the concept of trust within a supply chain. I'll get to that in just a moment. Let's talk about each one of these, and then we'll have a little bit more background in order to look at what blockchain is doing that might help. Transparency. On the left, you can see that within the diamond industry, and this isn't just diamonds, but it's in precious metals and also in some of the rare earth metals, there's a lot of discussion on where do these come from? What are companies doing? Where are they sourcing? De Beers has put together, along with a number of other diamond companies, ways to have transparency within their supply chain so that they're not using forced labor and other real sticking points for customers and consumers. Another example is illegal drugs. And this is a number of statistics here, and you can read these, but you'll notice that some of these numbers and some of these percentages of illegal drugs are very high. So if you don't have transparency in your supply chain, you don't know where the product is coming from. Your company, your pharmaceutical company, could be on the up and up and working with all regulation, addressing consumer issues, addressing health issues. And yet, if you don't have transparency into your supply chain about where everything is coming from, you may be part of the problem itself. Let's talk about visibility. There is a lot of discussion about having visibility all through the supply chain of where products are, what is going on, what companies are doing, and what your suppliers are doing. And you can see here that as you move, what we call in supply chain management, supply chain tiers are those tiers of suppliers that are closest to us and more further away. A tier 1 supplier is going to be closest to the company. Tier 2 is a supplier, tier 3, and as we move further up the supply chain. And you can see that in this particular survey that was done by McKinsey and Company, I mean, some companies say they don't have any visibility into their supply chain. They don't know what's going on. But as far we start moving up that supply chain, we don't know where things are. And if we don't know that, if we don't have that visibility in our supply chain, we can't figure out where the bottlenecks are. Here's what we call a supply chain map. In supply chain mapping, you map out what we call all of the nodes and all of the spokes in your supply chain. So what that means is all the where products are being manufactured, where they're being held, all right, and the transportation processes that as it moves along. If you have visibility, you can look at a map like this, and this is actually what a lot of experts are saying. You should have supply chain maps of all your supply chains. But to be able to go in and look at where is the bottleneck in here, first of all, if I don't have the map, I don't even know where bottlenecks could take place. And if I don't have technology, or good communication, I can't figure out where those bottlenecks are happening. Traceability and tracking. One thing that's important to know is that a single firm doesn't have the traceability or tracking through their whole supply chain. We think that when we cannot get a product from Amazon, that Amazon maybe has all of the information throughout the whole supply chain about where that product might be. And in some cases they do. They oftentimes don't. And here's an example. Recent studies showed that a simple refrigerated shipment can pass through 30 different organizations, requiring 200 plus different communications. Any hiccup, container could be held up, it could be lost. Okay, so we'll talk about maybe how blockchain can help us with some of that. And I put a little diagram in here to illustrate some of the issues that happen in traceability or tracking. We all been frustrated either at our companies or personally about where a product might be. First mile and middle mile are often not a problem. It's actually where the last mile, that is where it goes out for delivery from the warehouse to get to the customer, where many times our traceability has problems and where companies fail. Finally, we talk about trust. Having trust in when our delivery is going to make it, having trust with our suppliers, having trust within our own organizations. And oftentimes trust comes from figuring out some of these other challenges. And if we can figure those out, then the trust becomes better. If those of you who work with suppliers that are on the webinar, if you work with suppliers, then you know that trust becomes an issue. If you have your supplier that tells you over and over again that shipment's on its way, the shipment is here, the quality is here, and it fails again and again, of course, the trust is compromised. Now, sometimes suppliers are not trustworthy. Maybe they're not good suppliers, but sometimes the suppliers just do not have the best information and they don't have traceability, visibility, or being able to track what is going on in the system. All right, so all of this leads to a cost. And this is a British survey here. So of course, this is in that was done in Europe using euros. And you can see that impacts of disruptions can hurt companies and their supply chains in terms of resources, their inefficiencies, lost sales, customer complaints, losing competitiveness, and of course, their overall growth. And so companies have been very keen to get out of these challenges and to figure out how to make their supply chains more cost efficient and customer effective. And one of the things that has come along, of course, in the last few years has been blockchain and its development and its use in supply chain is growing. And I think that what you're going to see is as we get into this post-COVID area, that the disruptions, companies are going to try to figure out how do we get away from those disruptions. So let's look at blockchain. Of course, Armin had covered some of this. Cryptocurrency, there's a lot in software engineering, but really in supply chain management is the application that we're interested in. And what we're really interested in is how does blockchain help supply chain managers take care of some of these challenges that I brought up. Now, one thing that I will say is these aren't all of the challenges that supply chain managers face, okay? But these are some of the ones that have been pulled out in research. We've already talked about this a little bit about how transaction on a blockchain ledger are, they're signed, they can only be appended, they can't be changed. They're sequentially and cryptographically secured. So the idea behind it is as companies use blockchain to help track products, trace products, look at visibility, anything that's happening within the supply chain, anything that's happening within the block is being, once a company makes their append to the chain, the blockchain, nothing else can happen. Well, what does that mean? All right, let's say that somebody makes a request, a transaction. I like mountain biking, so I'm going to use a mountain biking example here. You have a frame manufacturer who is going to make a shipment of frames, okay? So this manufacturer within the supply chain, all right, who has been part of the chain, they've been allowed to be in the chain, they make a request. We're going to make a shipment. The request is sent out into the nodes. And there's a validation that goes on, okay? And the validation comes from the other companies. Well, Transition Bicycle Company, of course, is going to be one of the main customers. So they are going to be the ones that are part of validating that transaction that the frame maker, the manufacturer, is going to send a shipment. It's verified. It can involve different kinds of digital contracts to say, yes, this is happening. Once it's verified, the transaction is then combined with other transactions, probably within that supply chain group. Or I should not say probably, it is. The block then, that particular shipment then is put into the block and the transaction is complete. So you can imagine blockchain being these different blocks, a chain of them. And if you're talking about a delivery of different products that go into making a bicycle, there's going to be all of these different blocks. And the blocks are not only the companies that are putting in there, it's the shipment, but it's also each node that that shipment goes through. So it's going to be shipped to one place, goes through customs, gets moved to from a ship to a train. That's going to be another block, and so forth. Once the transaction is completed, you have a complete chain that is immutable. It cannot be changed. It can be appended. And if there are going to be any changes, everybody in that particular supply chain block has to agree to make that happen, right? So you can start to see here that companies, first of all, this is a secure transaction. Second, all of the information that is needed within that particular transaction is there, and it is stored, and it's secure. Now, this is a more difficult look at supply chain and blockchain. And I'm not going to go into this, but you can see my previous example was on a fairly simple level. This is a even more complex, and the complexity goes crazy from here. So we won't even get any further into that. Let's talk about some of the benefits of blockchain in supply chain management. So I've given you an overview and what it's going to do for companies, what it can do, and what we're already seeing it doing is to help with traceability, which we said was a major issue. It allows an audit trail for all of the transactions. Risk with all of your multiple stakeholders and looking at that visibility. Well, it's immutable, so it can't be changed by a company that maybe isn't part of the block or who may want to go back and change something. All of the companies within the supply chain know that. And those of you who might be in supply chain management often know that information, correct information, and updated information, responsiveness is absolutely critical. So blockchain also provides near real time, because as each transaction is happening, as I mentioned, a transaction could be ready in a shipment to move it. It can also mean simply that a truck stopped at a truck stop. All of those can be blocks within your blockchain. Digitization, we talk about digitization of supply chain, getting away from manual processing, which is amazingly still very prevalent within supply chains today. And of course, anytime you're dealing with manual processing, you create delays. Regulatory compliance, which of course is visibility. And then also within reconciliation, you have one single shared source of truth. So if there's any problems within a particular supply chain transaction, you can go back and look at what happened. I'll give you an example of that in just a minute. Well, all of the things that we talked about, transparency, visibility, traceability, and trust, can be, those challenges can be addressed through using a blockchain, the blockchain application, supply chain management. You can find better sources, planning, working to source and finding transparent sourcing, visibility, of course, throughout your supply chain, and also within the manufacturing. And then that last mile that I mentioned, the delivery, the logistics, and something we haven't talked about here that is becoming more and more critical in supply chains is the return process. Returns have increased like 130% since COVID started. It's something that consumers demand now. And to be able to have effective return policies, you need something that helps look at the transparency, visibility, and traceability. And if we have those, it leads us to consumer trust. Two other things that go along with this. One is the security of all of these transactions. The second is reducing those transaction costs. And part of that it then is delays, customer problems, and also the manual processes that create inefficiencies within our supply chain. I'm going to give you a couple examples here. I'm about to run out of time, but let's talk first about food safety. So food recalls, I spelled recall wrong, cost range, the range has been from 20 to 50 billion or more. It is significant. A blockchain platform can significantly decrease and address food recalls by decreasing the time it takes to trace a product from several weeks down to a few seconds. All right. Suppliers, service providers can figure out the origin of the product and the process that they use and get rid of it. So you think about E. coli, you think about other types of foodborne illnesses. And when these happen, you'll see, everybody sees something that goes out in the news or from the companies where the website will say E. coli problems in lettuce. We're going to have to recall all the lettuce in the Southeast, which is crazy because it could be that some of that, the only product that has the E. coli is one shipment. All right. So blockchain, because of this block, because of it has the history behind these transactions, can go into all of the different areas where product was shipped, and it can start to narrow down very, very quickly where the problem might be. And you have to think about car recalls, automobile recalls. Same thing happens because they're safety recalls. They have to cast a wide net. Blockchain could help pinpoint it, maybe even down to single cars, single production runs. So Walmart and Carrefour, international retailer, have already continue to use blockchain to gain visibility. I'll give you one other example, freight invoicing. So we talked about manual processes. Freight invoices have over 200 data points that go into it. And so for Walmart Canada, here's an example, 70% of your freight invoices needed reconciliation. Blockchain was used to help that visibility. They got those down to less than 1%. And I'll give you one last one with Tesla using blockchain to streamline their inbound logistics. They partnered with their shipping companies in Chinese ports. They were accelerated and more efficient deliveries of getting product in because of those different areas. My final point to you is there are still significant challenges in blockchain. I've given you all these great things. One is companies that are willing to share the critical information. Another is just adoption and implementation and the costs that go along with that. Some companies, some suppliers don't even know what blockchain is, right? So you have to think about that. You also have to build a user knowledge throughout the supply chain. Will these challenges be overcome? We're still trying to overcome some of these with internet use, believe it or not. So we'll see what happens. Thank you. I know I went a little bit over and I apologize for that. So that is it.
Thanks, John. That was amazing. And you know, I was remembering back when the pandemic first started, and everybody even realizing that supply chains were a thing. And where your presentation was today is just an order of magnitude more informative, and just very appreciative to have you both. And thank you both for not mentioning toilet paper during the whole hour today. So, so let's roll into Q&A. We've got one question so far on the Q&A from our friend Dennis Trox. And his question is, are there any local or regional companies using blockchain technology currently? So I don't know if either one of you, and you can both come back on camera. We can just kind of freestyle this.
Local companies, I know that IBM out of Raleigh, when we worked with IBM, they work with a number of companies in Eastern North Carolina and putting blockchain together. Unfortunately, I don't know exactly all of the companies, although I know they have partnered with Maersk. Of course, Maersk is a huge global shipper, and Maersk is used by a number of East Carolina companies, including Hyster-Yale, which is here in Greenville. So I'm assuming there's some work in there. I had a student about a year ago, who worked for a local company, and unfortunately I forgot the name of the company. It was a smaller company that is using blockchain on a test run. And that's the interesting thing, is all of the companies that have told me about any kind of foray into blockchain, all of it has been on a test basis. So they're still trying to dip their toes in it to try to figure out if it works for them.
Anything, Armin, to add on any of that?
No, I don't have any information on that.
Okay, Trey, I saw something popped up in the Q&A that said you wanted to address it. Is that accurate?
No, I hit the wrong button.
Okay, all right. And then from my awareness on that, I know that we had a student startup in the agriculture industry tracking leafy green vegetables for a project they did with L&M Produce. Their company was called Honest Blocks. I don't know the current status of their company or how well they're doing, but they were pretty impressive undergrad students in our computer sciences department. I learned a lot from their project over a couple of semesters. So let's move on to another question, and this is one that was texted to me in anonymity. Let's just say that. But so we talk a lot about all the great things in tracking bicycles and toilet paper and appliance parts and things like that. But this same technology can be used to track people and trace people. And so, do either of you want to talk about the privacy, the personal freedom implications that can be troublesome with using this kind of technology kind of uncontained, unconstrained?
But I have some thoughts about that as well. So obviously there is an objective to get everybody a digital ID that would be needed to access online services, including important government services, and there are legitimate reasons for doing so. So, for example, blockchain voting. So you want to make sure that the person who votes is legitimate, and you might need to confirm the identity online. So that could be a motivation for governments to issue digital IDs. And the other consideration here is digital bank, central bank digital currencies. So they might want to have everybody to have a wallet tied to a digital ID so that they can track every person and the transaction of every person. And that is a huge concern. I'm very worried about that, there could be the possibility that the government can see every single transaction that you're doing, so tying it to your identity, and using that to determine whether you can access other kinds of services, or in the worst case, confiscation of your money, or even worse than that. So I'm concerned about digital ID because it could be abused. So we need to have an adequate degree of privacy as well built in. And that's the reason why some privacy-focused blockchain projects are important. So on the one hand, we have a need to confirm the digital identity of everybody participating online and very important things. On the other hand, we need an adequate degree of privacy to protect people against negative or abuses of that. So it's, I think there are some technical solutions possible, but it needs to be adequately addressed.
Great points, very insightful. Personally, I spent a lot of time amongst the DoD research and development community, and as you can imagine, they're working on some pretty eye-watering technologies. And it was heartening for me to see inside the agency where I was working that, you know, a lot of these cutting edge technologies that are being developed, you know, the real focus and the real funding and resourcing is towards all the great things that it can do. But it was really neat to see leadership say, we also need to be thinking about and engaging with policymakers to not necessarily solve those kinds of dual-edged sword problems, right? Because the technology can be used just as easily to track you and me as it can to track the bicycle, you know, wheels. And so how are policymakers informed? Because a lot of them are not technologists, but how can they help build those boundaries with policies or whatever other, you know, other technologies that might be able to use to be used to kind of put a lid on it. And then just one more thing, we're kind of already in that world, quite frankly, without blockchain. So, you know, there's a saying in the technology world that if you're not paying for it, you're probably not the customer, you are the product. And I will tell you, there are companies that know more about your background and your health record and your travel habits than you probably realize, you know, that you could even write down on paper, quite frankly. And they sell that information, and it's not just to US companies. So there should be an awareness by the general population that, you know, carrying this thing around with you 24/7 like we all do, and all the free apps and all those other things, you are the product. And unless you look at it at the world that way, then we're not going to be able to get ahead of, you know, establishing these boundaries so that technology works for us, not against us, et cetera. Oh, more questions popping in. So I'm going to take these in order. This is from Tom Hronik. I hope I'm pronouncing that right, Tom. What would be an example of the blockchain validation process for supply chain management applications? And would it be more or less the same proof of work validation process used in Bitcoin? I'm thinking that'll go to Jon.
Well, the validation process is, and I don't know, I don't understand. I'm not in depth into the technology behind all of it, but within the validation processes, I'm going to give it to you. It's a very basic discussion of it. If you have, let's say you have 3 members of a supply chain, and those 3 members are going to use blockchain, there's an agreement that all 3 of them are invited to be part of that particular chain. And then as each entity adds their a block to the chain, it is either agreed upon or refuted by the other members of the blockchain. So there can be some complexities in there. And sometimes I think that what happens is it might not be so much that, unless it's something that's really a problem. What I think happens oftentimes is the blockchain will move forward, then there's a problem. You can go back and look at how the validations were set up, and then look at the information that's in those blocks and say, here was the problem, let's go back and fix this, let's talk to the company. So that is oftentimes how the validation process works. Of course, if it's something that's really, if it's just a bicycle frame shipment, it's going to be different than something that's major, like moving something very, very expensive, or other types of major financial transactions. Now, how that dovetails with crypto, the second part of that question, I am not privy to, and maybe Armin knows more than I do about that.
Well, I mean, there's a difference between private blockchains and public blockchains. So I would assume in many business applications, it would be more like a private blockchain. So you have a smaller number of authorized validators or trusted validators who have to agree according to a consensus algorithm. And there can be many different types of consensus algorithms. So I think there is perhaps already a dozen different consensus algorithms available. So the oldest one is proof of work that is used by Bitcoin, and that is the energy intensive one. So you have a competition to solve a puzzle, and that is requiring a lot of computing power. And the one miner that solves the puzzle first gets the block reward. So that is the most secure and the oldest method. And then you have proof of stake, which means that you have rewards according to the amount of cryptocurrency held. And another variation of that is delegated proof of stake. So that is something that might be used in the context of supply chain management. So there are different ways of achieving consensus. And the question is really, is it an open system or is it closed? And if it's open, it tends to be more secure because anybody can participate in it. Anybody can potentially contribute to the validation of a block. So that is something to consider here.
Very helpful. Thank you. Okay, next question from, and I'm going to try to get to two more questions. First one of the two from Crystal Melton. And I think this has to do with maybe Armin, you could field this one, has to do with your scenario where the government may be able to confiscate money or pull fines out of your cryptocurrency account. And she's asking, would they actually be able to do that since the owner has the private key? Like, would that not lock down the dollars?
Well, I mean, they're testing digital currencies in China right now. So you can, I think it's tested in Shenzhen, which is a town in China. And the government issues you a wallet, and you can transact using that wallet on your mobile phone. And I bet you the Chinese government has a backdoor into that wallet, and they can potentially stop transactions, and they can potentially take money out of that wallet if they think that the person owes the government something. So you don't know what the code is for the wallet. I mean, how transparent it is. So will it be open source? So if it's open source, then anybody can check whether there is some malicious code involved or whether it's intransparent. So if we get a Fed coin, so a digital dollar, then we need something that is open source and that provides protections against the government taking money out of the wallet. So I wouldn't trust the Chinese government on that.
Yeah, no, well, it's a great point that you're making, a real life point that is probably happening now. And it doesn't really have a difference in the technology and how in the technology that will be used in the United States as opposed to communist China, but it has to do with how far the government is willing to go against its own population. And that's the lesson that I think, us regular folks need to be thinking about in how far we allow our governments and other institutions to take this technology. Okay, I got to get Tom Kulikowski's question in here, and this will be the last one. Seems like adoption rate will be limited by the extremely high electricity usage required for blockchain. What is being done to address this obstacle? So I think this one in particular is going to the mining of creating new tokens, which is a little bit different from the application of the technology, but I'll let either Armin or John jump in and either counter what I said or dig deeper into that.
John, do you want to go first?
I don't have anything specific on that, although I do know about, I've read several case studies on crypto mining in Appalachia, in some of the more rural areas where companies have gone in. They are setting up crypto mining, and I know it's happened, trying to happen here, and because the power company, and I think it's the regional power company, I don't know if it's Duke, knows that the crypto mining uses incredible amounts of the electricity, and so they want them in there to be able to do that. There were a lot of complaints against those facilities that we've all read about some of that, and some of the local, the county commissioners and so forth asked that exact question, and the companies themselves, the crypto mining companies, said, we have no idea, we're trying to make it quieter. That's all they said. There was no discussion of using less electricity, only that they're trying to make it quieter. So that's my.
But I think Armin, you may know more on this, but you know, there's hundreds of different cryptocurrencies out there. Some of them have a finite number of tokens that can be discovered, and others have an order of magnitude more tokens that would be available. So mining for some of them is at a premium. It takes a lot of computing power, like you said, like Armin was saying, to solve those puzzles, those riddles that can gain you a token. Others have so many tokens that would be available that it's not as big a deal on the mining side. So Armin, anything before we close on that?
Well, it depends on the consensus algorithm. So I mentioned the proof of work, that's the one used by Bitcoin, is very energy intensive. But since then, we have other kinds of consensus algorithms, in particular proof of stake, which is now the one Ethereum is using or wants to use. So they're in the process of switching to that because it's costing less energy. But the point I want to make is it's the price we pay for security. And there cannot be really an upper limit to the price we want for our security. So if we want high security, we pay more. And that's the advantage of Bitcoin. It's tremendously secure because of proof of work, because you would have to redo all the work in order to change the blockchain. And that is economically not feasible. Also take into account that mining has to be profitable, otherwise it wouldn't happen. So if you pay $17,000 or $18,000 to mine one Bitcoin, and Bitcoin is worth $30,000, you're still at a profit. However, if the energy cost would go up so much that it exceeds one Bitcoin, then the miners would simply take it offline. And as a result, mining would get cheaper because it's all a function of the competition that is happening. So the more competition for block rewards exists, the more energy is needed in order to get the block reward. And that is contingent on the price of Bitcoin, as I said. So there are breaks built into that system that I wanted to point out. So nobody is going to mine at a loss. So when it becomes unprofitable.
Great points. Well, thank you both again. Just incredible insights. Trey, I know we took you, looks like 3 minutes over. I apologize, but turn it back over to you.
My fault.
No problem. Thank you so much, Keith, and Armin and Jon. Thank you so much for your fantastic presentations today. Blockchain is a technology that could potentially affect all industries, and especially some local industries, you know, within healthcare, agriculture, and obviously the supply chain. Thank you everyone for joining today. This session was recorded. The recording and presentations will be sent out in a follow-up email tomorrow, as well as with contact information for the speakers. If you have any questions about that, please reach out to me. With anything else, thank you so much for joining. I hope everybody has a great rest of their week.
Thank you. Bye.